All right, then welcome back. Breakfast Central on News Central. We've got interesting news for you here and a discuss that you don't want to miss right now. Well, GameStop Corp. Have you heard about it? Yes, a Fortune 500 company headquartered in Texas is the digital first omni-channel retailer now offering games and entertainment products in its over 5,000 stores and the comprehensive e-commerce properties across 10 countries.
Now, GameStop shares went up 70% in pre-market trade last week after online brokerage firm Robinhood eased trading restrictions. Now, could what happened with GameStop happen here? What exactly happened, actually? Because this is a massive story right now. Tunji Andrews, financial analyst and founder of Awobah, joins us right now. Tunji, good morning to you and welcome again.
Good morning. Good morning.
All right, so let's get into this. Walk us through very quickly what this whole GameStop saga is all about. Some have said that at the heart of this situation is a struggle between two drastically different groups of investors, a band of amateur day traders versus a bunch of Wall Street pros who are known as short sellers. So what do you see this as?
All right. So to be able to understand this, you need to understand what shorting is. So imagine if I decide to, there's a stock, let's say stock A on the stock exchange, which is wherever. And I look at the company and I believe that the company right now is selling at 5 naira. So I think the company is going to do badly in the future. So what I do is that I short it. And by shorting, what I do is that I buy it for 5 naira and I borrow it for 5 naira and I sell it immediately. Now, I sell it for 5 naira thinking that it's going to fall to like 3 naira, right? And then what happens when it gets to 3 naira, then I buy it back and I've made the 2 naira margin on top of it. What has happened with GameStop is that those people who borrowed it, betting that the company would fail, found some retail investors talking about it online and they pushed the prices up. So just the same way that I borrowed the stock at 5 naira and I sold it immediately and I have 5 naira with me, imagine if the price is now 45 naira. It means that when I have to buy back every single share, I have to pay 40 naira extra what I bought. So the institutional investors are into what we call a short squeeze right now. So it's like you went short on the company and somebody else comes and makes the price really go high. And right now you're in a position whereby you can't even afford to buy it back, to be able to pay back the person you borrowed it from. And it's the institutional investors are crying foul, but the honest truth is they've been doing this for years. So it's pretty much like a piece of their own medicine.
Very true. Well, Tunji, we saw last month that on January 11th, GameStop, announced 3 new directors would join its board, including co-founder Ryan Cohen. Also, on that day, GameStop their stocks rose a little less than 13%, you have to say, but this wasn't a normal monetary stock surge. Now, 2 days later, it rose to about 57%, then 27%, and so on. On the 26th of January, this year, GameStop was the most traded stock, on the planet. Even as of Friday last week, 29th of January, GameStop stocks was about 1.587%. 1 year ago, a single share cost about $4, but now it's about 150. Please take us through what's really happened here now with this up and down movement.
Okay, so I think the way to explain it is imagine the viral conversation of NSARS.
Okay.
Imagine, where everybody was talking about NSARS, tweeting NSARS. Now imagine that being talked about a particular stock. Now the idea was that the institutional banks had bet that the company was going to fail. So it was a case of, you guys, let's stand up to these people. This company is not a bad company. It will not fail. Let's make sure that this company doesn't fail. So and there's like an online group called Reddit that is probably where it started.
Yeah.
So they started having the conversations on Reddit, and unfortunately within Reddit there's another group which I'm thinking everybody has started deciding not to name them because they're pretty much a problem. They made it go seriously viral. So it was a case of everybody trying to buy GameStop shares, not particularly because of GameStop's performance, but because of this viral conversation. So people are trying to buy. The people who had bought were not selling. So the demand for GameStop shares increased dramatically.
Okay.
So everybody was trying to buy. Imagine everybody from across the world saying, I want to buy, I want to buy, I want to buy. Those who have it are saying, I'm not going to sell, I'm not going to sell, I'm not going to sell. Eventually, we saw the massive spike in the prices of GameStop. Now, the people who bet against the company are now crying because they are now exposed to 700 millions. One of them just filed for bankruptcy yesterday. So it's a situation whereby this is the first win for the little guy against the big guy.
The little man,
is that history always shows that whenever the little guy wins against the big guy, the little guy eventually becomes the big guy. So
Tunji, let me follow up on that. So now we've talked about GameStop in the American stock exchange context, but can something like that happen here? Given the fact that we also have a situation where the average African is not so interested in the stock market. So as you said, this came from primarily driven by a Reddit thread. People were actually having conversations about it, but many of us are not that interested in being on the stock market or making these moves ourselves. So can we see something like that happening here on the continent?
Maybe in South Africa to a certain extent, but with Nigeria, we have what we call a circuit breaker. It's pretty much a case whereby we have put in all kinds of stops and checks to make sure things like that do not happen, which of course is not very good for liquidity. And it just shows that we're not as mature as a market as we would love to be. So if the Nigerian Stock Exchange, for instance, falls below 5% in a day, it goes into an automatic circuit breaker. What that means is that it will shut down, and then it gives everybody time to cool off, and then they can come back in a few hours. That isn't good, really, for trade, because really what it is that whether it is going up 5% or going down 5%, somebody is making money and somebody is losing money. And at the end of the day, we all come to the market to make money. But we are not yet that mature in the Nigerian market yet. But the South African market is very close, very, very close. And this is where we all want to be. Imagine if we had a viral conversation about any Nigerian stock and we want to push it up by just, what it does is that everybody gets educated about stocks. The average person wants to find out what's happening. So just like in America, we found out that some students paid off their student loans by investing in GameStop. They're at home and all of them got stimulus checks. And they were not doing anything with the stimulus checks. So many of them just put their money in GameStop and became millionaires overnight.
Wow. So
it's a situation whereby the conversation now becomes everybody's buzzing and talking about it. But we don't have that situation in Nigeria, and we are still expecting retail investors to come to the market.
Even when we do, it ends up being like a Ponzi scheme or something that people just go in there and you find out it crashes after some months. Well, yeah, go on.
It's like the Ponzi schemes of the past. We all remember their names. I will not call their names right now, but this is the same way the Ponzi schemes became viral. People are making money. Everybody wants to hear this, that was this. That is the way your market progresses, not the one. Because right now our market is full of institutional investors. It's either they are foreign investors or big local investors. There are very little retail investors on the Nigerian market. And this is the kind of conversation that makes it happen. But unfortunately, our market makers would rather protect themselves than make the market bigger.
Before we let you go, Tunji, let's talk about Bitcoin. The recent rally we saw recently, especially with founder Elon Musk. He changed his Twitter handle, and it really improved the percentage price of cryptocurrency with a sudden rise of over $300 million dollars worth of Bitcoin in just short positions. Now, how does one man's comment or tweet have such impact on the market?
Very quickly, because of time.
Elon Musk is probably the richest man in the world. Of course, he says this is good. Everybody's going to put their money into it. And also, there are a lot of people who have been cashing out of their businesses recently, exiting businesses. A lot of tech companies, did a lot of takeovers last year. So a lot of them didn't have anything to do with the money. These people are 27, 28. They have several billion sitting in their bank account, and they think, let's put it in Bitcoin. And naturally, the price will go up.
Okay. We're going to talk more about Bitcoin in another conversation we have with you because it has been skyrocketing. It's settling around $32,000 right now. And I'm wondering to myself, why did I not invest early on? But it's okay.
Never too late.
No, right now it's possibly a little, not too late, but it's K-leg. Anyway, Tunji Andrews, thank you so much for joining us. We will see you next week. And of course, having more conversations on those financial issues we want to understand a bit more. So thank you so much.
Thank you, Tunji.
Thank you for having me.
All right, so GameStop. He said people became millionaires overnight. I'm just trying to think of how life changes so quickly. The value you have in a company becomes millions.
Triple fold.